Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com. You can find the link to the website in the description below. The Organization of Petroleum Exporting Countries, or OPEC, recently extended its cap on oil production in effort to stabilize and support oil prices. On the supply side, this should help hold prices, especially if global demand for energy increases. To play oil and gas segment, consider Berry Corporation, traded on NASDAQ under symbol BRY, a small onshore petroleum, oil, and natural gas producer with market valuation of $482.4 million as of this recording. John?
Yeah, thanks, Mo. The company, formerly called Berry Petroleum Company, has a long history dating back to 1909. It's currently focused on San Joaquin Basin in California and in basins in Utah. In the first quarter, the company reported average production of 25,400 barrels of oil equivalent per day, and oil production alone of 23,800 barrels of oil equivalent per day. Now, Berry stock is currently struggling after declining to a 52-week low of $6.18 per share this past June 4th. The stock's one-year chart shows two peaks offs back to the $6 level. For contrarian income investors who are willing to assume some risk, BRY stock has a compelling risk-reward trade-off at its current price level.
What can you tell us about their fundamentals?
Well, the first thing I can tell you is that they need to improve their operational results. Its revenues managed to grow by high double-digit percentages in 2021 and 2022. Moreover, the company generated record high revenue of more than $1 billion in 2022. Unfortunately, Berry Corporation reported an 18.2% revenue decline in 2023. When the current estimates call for the company's revenue weakness to extend into 2024, analysts estimate that the company will report a revenue contraction to $684.4 million this year before reporting a pretty solid rebound to $705.9 million in 2025.
What's happening with their profitability?
Well, this is one bright spot. Analysts expect the company to report adjusted earnings of 75 cents per diluted share this year, compared to 51 cents per share in 2023. And they expect this to be followed by a surge to 96 cents per share in 2025. They also have a history of consistent free cash flow, which is good because it uses this to pay its dividend and service its debt. In the last 2 years, the company generated its highest annual free cash flow level since 2019, $221.8 million in 2022. And $117.6 million in 2023.
What's happening with dividends here?
Well, as of this recording, BRY stock's forward dividend yield of 11.6% is relatively high, but it's largely due to a share price deterioration. I expect that Berry Corporation will try to maintain its 7-year dividend streak. This will likely happen, given the company's higher expected profitability and as long as free cash flow remains positive. And the company's dividend coverage is pretty strong at 3.6 times.
John, thank you so much for your insights. Berry Corporation has some work ahead on its own revenue side, but the company's recent higher profitability is a positive sign. Furthermore, contrarian income investors can collect nice dividends while waiting for the company to improve its operation and drive rally in Berry stock's price. Another positive sign is that institutional ownership of BRY stock is extremely high, with 245 institutions holding 93.4% of the outstanding shares. Insider interest is low at 2.6%, but companies' insiders have been heavily buyer of Berry stock lately. Over the last 6 months, insiders have acquired a net 1.4 million shares of the stock. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned, and in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.